Lower dollar means usually higher commodity prices, and this is good for emerging markets.
Hello Bruno, it's great to see you as always, and today we're going to focus a lot on the US economy and some things you've been looking at into that. So let's start off. Can you tell us about US dollar weakness? Is it going to last?
Hello Jack. Well, let's look at the weekly charts of US dollar index. And what we see is the candles are coming down. Okay, we have a downtrend, that's clear. But also look at this orange line. And this orange line is the spread between US rates and German rates. And when it's narrowing, that means that US rates are coming closer to the German rates. That makes the euro more attractive and the dollar is coming down. But look where we are. We are close to some support area around 94, 93. And at the same time, it looks like eventually the orange line is kind of bottoming. So we might be reaching, given the fact that we are very oversold here on the oscillator, we might be reaching some kind of a support and we might enter a pause zone.
Has this weaker dollar affected European markets?
Well, it should in theory, of course, because it is harder to export for the European industry. Let's look, that was reflected basically in the weaker relative strength of the Euro stocks versus the S&P 500, which is coming down. And we see now that compared to 2 weeks ago, we are still at this key support level, 34, 35. Momentum is clearly oversold, so if either we hold that level and can rebound a little bit, or we break it and then we have a correction to what, 3,300.
Mm-hmm. And what about Japan? Is this weaker dollar affecting Japan?
A little bit less. As we see, the orange line is the yen index. So here it's more in a trending range instead of a straight up line. That means that basically the euro is stronger versus the yen. And it has affected on the relative strength of the Nikkei versus the S&P a little bit less. And it's basically flat, we can say. Also, we notice here, we see almost nothing because it's in such a tight trading range between 19,500 and 20,500. That's where we're waiting basically for the breakout either sides.
Mm-hmm. And finally, emerging markets. What effect has this weaker dollar had on the emerging markets?
Yeah, you're right. Lower dollar means usually higher commodity prices, and this is good for emerging markets. Let's look at the different emerging markets. Indeed, we have an uptrend for India. Relative strength of India versus the S&P 500 is also rising recently with the recent weakness of the US dollar. What we noticed here is possibly some kind of caution because we are reaching some flat upper Bollinger Band. That means that that could become a resistance given the fact that we are also relatively overbought on the oscillators. If we compare India to China, we see that we are also in an uptrend, and recently, the last 3 weeks, it has went up quite a lot, but it's reaching these double red lines here, which represent basically a big gap in 2015, and these kind of gaps can become a strong resistance area. So here we really need to see if it's going to clear it. It could take some time as the relative strength of China versus the S&P 500 is relatively stable.
Mm-hmm. And
one more is Brazil.
Let's not forget Brazil, exactly.
That's right. Brazil has been on a daily basis stalling a little bit below its resistance, which is basically given by this points between the huge gap of the political uncertainties which was created in May.
Yeah.
We see the momentum is coming down, so probably it's going to stay at that levels also.
Mm-hmm. All right, that's the emerging markets taken care of. The weaker dollar took place with a US 10-year yield pulling back down. What's your view on US rates at the moment?
Yes, indeed, 2 weeks or 3 weeks ago we were at 240%, and it went down to 225. That occurred when the US dollar also weakened. Now look at what just happened recently. This downtrend has been broken yesterday with a big up move, and that basically, given the fact that momentum is turning up from a very oversold levels, that gives the indication that it can move up to 240 back again.
Mm-hmm. So is this good news for US financials?
Oh yes, yes it is. It should be good news for US financials. US financials, given these rising rates already for 2 months, are moving up. And we see that in the last 2 weeks, when the rates were pulling back a little bit, there was a pause, and now it's moving up again, and it's showing up a test of the 25 area. We should remember that 25 area is a very strong resistance because it was the top of the financial sectors already in 2007, before the financial crisis. So it may take some time to clear that resistance. So in particular because short term we're relatively overbought.
The technology sector as well is rising. Can this rise continue?
Well, we hope so if we want to be bullish. However, if we look short term, what we notice is that it's kind of respecting the resistance at 57.50. And if we want the technology to continue to rise, probably what we will need is again the relative strength versus the S&P 500 to rise again. So that's not yet the case, so we still have to wait a little bit as the situation is a bit overbought.
Mm-hmm. And you also look at the outperformance of cyclicals versus defensive sectors. Is there any sign yet of a turnaround?
Well, what we noticed in the past, the black line is rising. That means that discretionary are outperforming defensive staples. But on the other hand, if we look clearly what's happened here with these higher highs, it's a little bit on a downtrend divergence here. So basically it says that we have not cleared the previous resistance, and we still have to wait to get a clear signal for a more bullish outlook.
Mm-hmm. And we usually start with the S&P. We're going to finish with it today. 2 weeks ago you mentioned 2430 as a key level to watch for the S&P. What should we look at today?
Well, that was 2430, that was this breakout of this trend line, and in fact it went up quite clearly, making higher highs toward 2477 and 2481 even yesterday. But here we noticed something. Higher highs here are not met with higher highs on the stochastics. This is so-called bearish divergence that could call for some pause short term. Also, we noticed here that the price opened here at that level, 2477, closed at the same level after refusing a kind of a smaller high at 2481. Given the fact that the VIX is very low, below 10%, that produced a kind of a upside reversal. So we need a little bit to be cautious here on that S&P. If it's held above 2470, the level we mentioned here on the top, everything is fine and we could extend slowly toward 2500. If we break 2470, I think we are now in a period between August and September where it could be the beginning of a longer lasting correction. So here, a level to watch certainly.
Bruno, as always, thank you so much.
You're welcome, Jack.
And thank you for watching, and me and Bruno will be back in a month's time, so see you then.